Hello everyone and welcome back to Crypto Atlas. In today's video, we're going to talk about Bitcoin, Ethereum, Orchid, as well as the graph, diving into the news as well as going into the charts. If you are new to the channel, don't forget to hit subscribe, hit that thumbs up like button. Let's try to get to 100 likes every single video, guys. I am letting you guys know it helps out so much. So if you get into the habit of watching these videos, if you could also try to get into the habit of just clicking that little thumbs up like button, it would really mean a lot to me and I'd really appreciate it. And also don't forget to click the bell icon so that you actually get notified whenever we have a new video. With that being said, let's get into this news. First up, some things I want to highlight. I'm actually on Twitter, by the way, so I'm at Atlas Official TV. If you guys want to check me out, if you use Twitter, at Atlas Official TV. And I'm probably going to start promoting that a little bit more with stuff. So Elizabeth Stark over on Twitter, she said the Lightning community is about building, not hype. Lightning is a marathon, not a sprint, and we're bringing Bitcoin to the next billion people. For those of you that don't know what the Lightning Network is, some people complain about Bitcoin being too slow. So the Lightning Network has been essentially layered on top of Bitcoin to help expedite that transaction process. And the way that that works is through validating former relationships. So for example, if I go to the grocery store there and I do a transaction, there's now a relationship between me and the grocery store that exists on this imaginary map. Now, if somebody else goes to the same grocery store, there's now a relationship between the two of them. But because me and this other person both share a similar relationship, which is the grocery store, if I needed to do a trade with that person that just went also to the grocery store, the transaction process to be approved is going to be faster because it's now been validated through the system. And that goes through the network, through the grocery store, instead of me trying to do it directly to the individual, if that makes sense. So it's kind of circumventing around the validation system based on previous relationships and helping to expedite this actual transactional history. Now you're creating this roadmap of relationships. So in theory, the more people that use the Lightning Network, the faster that it can be. I've used it as a test before with somebody else, and it was very fast, the actual transaction. I think it took place within like 30 seconds to no more than 2 minutes, if I remember correctly. And a lot of people complain about Bitcoin can take up to, like an hour for some of these things. Some other highlights that we have. Grayscale just bought 5,132 Bitcoin, which is worth around $190 million. All right. Grayscale's been buying a lot of Bitcoin. So if 5,132 and $190 million sounds like a lot to you, they own billions of dollars worth of Bitcoin and they're a management company. So they got a lot of different clients. And shortly afterwards in December, towards the end of December, they actually stopped doing trades for a bit. So they've just recently reopened, and this is some breaking news. And obviously the more that they buy, that causes more of a shortage supply. And we're already seeing this happen with PayPal and doing their purchasing as they've been now introduced with this. But again, PayPal is only being used in the US to be able to buy Bitcoin. They haven't even expanded out to the rest of the world yet. So there's still plenty of room to grow with this stuff. Then you've also got Cash App. And they had a lot of big promotions that came out recently. I wouldn't be surprised if they do another one sometime soon. So this is really bullish news for sure. Another 5,132. There's only a certain amount of Bitcoin that's actually being mined every day. And at the rate that Grayscale's been going at, they're actually consuming more than the daily production rate of newly mined Bitcoin, which means that all we can work with is what's currently out there in circulation, right? So yeah, kind of strap yourselves in, guys. Progress of Bitcoin becoming worth more than Apple. We got 33%. We're on the way. Now 1/3 of what Apple's worth is. So that's a big statement right there. At the current rate, Grayscale will own 3% of all Bitcoin in 10 days. So just kind of tying in with how significant the buying volume is of Grayscale, 3% of all the Bitcoin in the world, and they're still going, right? They're managing all these coins. Now, one thing I'd be concerned about is what if there was some crazy hack or something that came into Grayscale? That would be a huge fiasco, and they're probably becoming a bigger target the more that they try and acquire this stuff. So their security has got to be on a whole other level. Okay, so we're now at 4 o'clock p.m. Pacific Standard Time. Just so you guys know, we're on a new daily candle, 4:02 p.m. technically as of the time of me recording this video. So the new formation, we'll discuss that in just a minute here, but let's go ahead and get through the rest of this news. All right, so with some of the other cryptocurrencies that have been really doing well during this market, and you guys should probably keep an eye on, and these are some bigger names too. You have Ethereum, obviously, the number 2 cryptocurrency, the world's largest cryptocurrency after Bitcoin, and the platform that many of the biggest DeFi projects are built, has risen more than 600% over the last year, largely due to booming DeFi interest, with the Ethereum price doubling in the last month alone. An Ethereum rival, Polkadot, has this week become the world's 4th largest cryptocurrency by total value, surpassing the embattled XRP token. Polkadot's DOT token has risen threefold over the last month, adding to gains of almost 500% since August. Polkadot is a proof-of-stake blockchain network, rewarding holders of tokens unlike Bitcoin's proof-of-work blockchain that rewards so-called miners. Polkadot's claims to fix Ethereum scalability and interoperability issues. Elsewhere, Chainlink, an Ethereum-based token that powers a decentralized network designed to connect smart contracts to external data sources, has added over 40% to its value in the last week, taking its total value to $6.4 billion. Aave, I think is how you pronounce this name, or Aave. I'm not actually sure, to be honest with you guys. I've seen it before, but anyways, Aave and Maker, the last 2 largest DeFi projects by value, have climbed 75% and 47% respectively over the last week alone. Bahamas-based Deltec Bank holds a large Bitcoin position. So this is interesting because the stablecoin issuer Tether is a client of Deltec, and Tether is supposed to be that one-to-one relationship of the United States dollar, although it's technically not. It's a really confusing situation. Apparently they have other assets. A lot of people are really suspicious of Tether and whether it's something to rely on or not. Oh, and if I remember correctly, somebody was complaining, saying my volume was a little bit low, now that I think about it. Okay, hopefully that's a little bit better now. Bahamas-based Deltec Bank and Trust said during a recent video review that it's holding a large position in Bitcoin. The information was given by their chief investment officer, Hugo Rogers. Good thing it wasn't Hugo Chavez, right? Anybody get the joke? Nobody? No? All right. We bought Bitcoin for our clients at about $9,300, so that worked very well through 2020, and we expect it to work well in 2021 as the liquidity crisis continues to run hot. A small position in Bitcoin can go a long way. There's a lack of an alternative in real assets that can show a comparable return. If you're going to diversify your portfolio anyway, this is a good place to go. The stablecoin issuer Tether, as I mentioned, is a client of Deltec. Tether then responded to this by saying, "We are aware of recent statements by Deltec Bank and Trust Limited about the purchase of digital tokens for and on behalf of their customers. Tether does not outsource decisions about its reserves. Deltec does not purchase digital tokens for and on Tether's behalf." So they're independent. German private bank Hawk and Aufhauser announced that they would launch a crypto investment fund this year. Such a move will allow institutional and semi-institutional investors to invest in digital assets, including Bitcoin, Ether, and Stellar. PayPal's Bitcoin revenue expected to top $2 billion by 2023. If the figure ends up surging to $2 billion, it would equate to 10% of PayPal's total annual revenue, following a shift in momentum towards cryptocurrencies. Quite substantial. In December, Pantera Capital CEO Dan Morehead said that demand on PayPal's platform was more than 100% of Bitcoin's mining supply. All right, so again, let me try and put this into picture for you. You have Grayscale, which their company alone is purchasing more than the daily produced mined Bitcoin. Just them alone. Then you got PayPal, which is also purchasing the equivalent or more to all of the daily mined Bitcoin. How can you have two companies that are consuming the same amount? You can't. You understand? So one of them is technically diving into the reserves. So all the new mined Bitcoin is being consumed, and then all the reserves are being consumed. And that's just two companies. That's not including billionaires like the individual from Mexico, who's like one of the richest people in the world. I think he's like number 2 richest inside of Mexico. He's a big proponent on Bitcoin. What if he's still buying more Bitcoin? What about Paula? I can't say this guy's name. He's been on the news recently. It starts with a P. Papadakis or something like that. Anyways, so you got a lot of people that can still buy Bitcoin that are major players that have big money pockets, and then you got other side institutions that, as a corporation like MicroStrategy, they come in and they buy a ton of Bitcoin too. And again, what are you doing? You're buying all the older Bitcoin because all the new mine Bitcoin is already gone. Like somebody just by themselves is able to purchase that up every single day based on the production rate and based on the acquisition rate on the client side from either PayPal or from looking over on Grayscale. I almost forgot their name for a second. Traders say Bitcoin price needed a pullback to maintain the bullish momentum. I agree with this. I think it's healthy. You can't just go up, 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 up. Eventually, at some point, you got to have some sell-off, a little bit of a cool down. Everyone's like, are we good? All the craziness is done? You that owns a ton of Bitcoin. Are you okay? You're good? You're not going to freak out over this? You're a hodler? Oh, you're going long-term, huh? Okay, oh, he just died. Well, his Bitcoin's no longer in circulation. So, sorry about that, bro. Anyone have access to that guy's Bitcoin? No? Wait, would that be illegal? There's so many questions. Also, why am I not grieving more that this guy just died? I'm so sorry. Rest in peace. Okay, anyways, continuing on. Bitcoin's risk is approaching 2017 levels. Investors that buy at this price can expect to lose 40% of their investment sometime in the future. This is their quote, not mine. However, the typical maximum drawdown is 30%, so this risk is only modestly elevated from the average. Again, you got to be careful. You're comparing things to past trends in which a lot of things have shifted since the 2017-2018 market. For one, the daily production rate has now been dropped by half, and then you've also exponentially increased the number of people for the demand side. So it's happening this double effect, right? And so to use the same chart references, it's not as reliable. And if anything, I would almost be looking at those charts and saying, cut those in half. I think that's a more realistic expectation. If you're trying to theorize what's going to be happening going on here in the future, you've essentially, I would look at probably doubling, or if not more, the amount of actual demand for purchasing of Bitcoin, and then the reduction of the daily produced rate is gone down by half. So I would look at it and say that if you're looking for pullbacks, the level of pullbacks at most would be 50% of the maximum pullbacks that had occurred in the last cycle. Anything can technically happen, don't get me wrong. But if you're wanting something that's a little bit more reliable from like a trend perspective side, that's just my suggestion. It's just my opinion. I'm not a financial advisor, but it's just my opinion. For Bitcoin's valuation to reach 2017 levels, it would have to be at least $80,000. There's a small chance that would happen, and if it did, it would happen quickly. High prices have a tendency to move even higher. Man, I need Bitcoin to get to $80,000, or more specifically, I need it to get to $75,000, and I need that to happen before May. Why? Well, because I made a little side bet with my roommate. So if Bitcoin hits $75,000, he owes me a really nice lunch. And if it doesn't hit it, then I owe him a really nice lunch. Made that back in May of last year. So making good progress. Price is now seen pulled back below the ×3 multiple where I expect it to stay for a while. As others have spoken about, price likely ran up to ×3 beyond ×2 because we've had an earlier mania phase in the cycle versus last cycle with both retail and institutions buying. All right, now let's go ahead and get into the charts. So first thing I want to just go ahead and highlight here, I'm going to go ahead and leave this purple line unless it becomes too much noise, and then I can go ahead and remove it. But for right now, basically what I did is when we started to have this major breakout zone continuation up, including the pullbacks, I wanted to see what the trend continuation would be on the road trying to get to $100,000. So as it is right now, we're seeing some more pullback. It's actually below these levels. If it was to try and recover its position back up, I would say the most realistic time frame, we have a bit of consolidation that's occurring here all the way up until January 22nd. If it manages to get back up to that level and then continue to follow this pattern as the rise started to exponentially increase itself up, that's a nice little region zone to start to re-enter back into this previous trend history, right? Otherwise, we could be looking at it taking longer unless there's an exponential candle that comes out of nowhere. Elon Musk tweets out something really nice about Bitcoin. He's promoted Dogecoin, man. I mean, like, if you would actually just say buy Bitcoin, something like that, then all these people on TikTok would be like, oh, Bitcoin, go buy the Bitcoin stock, oh, look at the Bitcoin stock. It's kids, man. And people go, let me just say this real quick, by the way. There's teenagers, right, on TikTok. People are taking financial advice from teenage kids on TikTok, making videos promoting Dogecoin, trying to give their technical analysis saying that if it goes to $1, it's a teenager promoting Dogecoin. They call it a stock, and people were upset when they took this financial advice and they lose money. Oh, jeez. Anyways, looking back at the charts here, 2 days of closure in the red. Now in the 3rd day position, we are still seeing it in the red. If it decides it wants to drop down, we're seeing a level right now. We had a little bit of a bounce that took place back on the 15th candle, and that was at $34,300. So just slightly below that at $34,000 is looking at as a major level of support currently. Then further below that, I would actually be looking at these levels, which is at $33,400 more or less, and then another position we can look at right here, which is at $32,000, $32,050. Those are several key levels, and then our biggest drop zone is actually right down at the $30,000 price point. If it decides it wants to break up and try and recover into this position, then what we could end up seeing is it trying to break through right here, a level of resistance at $38,300. Another level would be at $40,600, and that would actually enter the base of this candle position of what I was showing you guys on a theory perspective. And then a further level all the way up we would see at $45,000, which actually would pass the previous all-time high. So technically $42,000 first, then $45,000, $45,500, and then another level up to the major level of resistance based on the trend pattern we've been seeing, which is at $47,000. So a $47,000 position from today, you're looking at a $11,250 gain. Is it possible? Yeah, kind of. Have we seen it before? No, we haven't. So that's a very unrealistic perspective view. And on top of it, having that much of a gain, the odds of it having selling pressure going on it too is extremely high, especially because we're not above 40,000. Right now, 40,000 is that major level of resistance wall. That's the biggest psychological wall that we got to get over right now. All right, now let's go take a look at Ethereum. And by the way, let me clarify something to you guys too. If some of you guys are wanting some more in-depth technical analysis into some of these things, keep in mind that I'm not trying to make super long videos, for one, and two, also is the fact that some of these coins like Bitcoin, they're in price discovery zones. There's not much to really reference off of before to try and forecast where it could end up going to next. You don't have much to reference. That's the problem. So there's only a limited amount of information that you can really speculate on. And I'm trying to give you guys more reliable based information than all these fairy tale wishes of things. You know, I could say that it's going to hit $100,000 before the end of this month. Okay. I mean, it could hit $25,000 before the end of this month. Okay. Where's the actual strong based evidence behind that stuff? Oh, there's not a lot of substantiated evidence. Well, then it doesn't really seem like it's something to validate and say, right? So hopefully you guys appreciate the fact that I'm trying to be more transparent and honest with you guys and not have a biased perspective view. I believe that by the end of this year, Bitcoin can very well hit $100,000. I think that based on the open market positions, the fact that there's a 20% chance, according to the analytics, that it could hit $50,000 by the end of this month, and that we're only halfway through this month, I think that's also a reliable statement to base off of. Looking at Ethereum. Ethereum also starting off its day in the red candle position, and it looks like we've been holding some resistance right around $1,250 or so, and the next major level is just under $1,300. If it can manage to break above that, then we've got 1,420, the previous all-time high. That is the next major zone for us to be able to try and pass. If we drop down below this to get to the 21 EMA, that's at $1,050. Right below that is going to be the 1,000 psychological level. A further level down below that is going to be at $908, and if we have a massive drop down wick like what we had back on January 11th, then I would be really considerate looking at $832 as another major potential bounce zone. It does look like it's having some consolidated time as of the moment. We are here on a Saturday. It might not make any move until towards the end of Sunday evening. Crypto doesn't have a Monday through Friday kind of cycle, although when Wall Street does open up, it tends to show that there's more active buyers and sellers willing to come into the market, especially when you look at things like the CME, which the CME does work on a Monday through Friday cycle. But a traditional exchange like Coinbase, Kraken, Huobi, Binance, all these kinds of things, those ones are 24/7. And man, my nose is really itching. Next one up. Let's go take a look at what's going on with Orchid. Orchid had a really nice gain candle yesterday, and then guess what? Massive sell-off. Boom. Over 50% sell-off again. Anytime it tries to get some nice momentum, it ends up getting this massive dump. And so it has habitually shown itself as a pump and dump kind of coin, and as it was reaching into the higher quadrant on this previous consolidated phase, it had essentially tapped off of the 30-cent range and came right back down. So psychologically, 30 cents is a major level of resistance for Orchid right now for it to try and break into. The good news is that we are still in this upper quadrant of this consolidated space, this big green rectangle, as you guys can see, in comparison to where it was before, but it is also resting right on the edge, on the verge of dropping down once again back into this lower phase. So with where we're at right now, a drop down, I would be looking at a baseline support at 26 cents or 0.2636. That's a major level. Next major level is going to be at 24 cents or 0.2442. And that 0.2442 is actually, interestingly enough, right at that baseline of that consolidated space I was talking about before. And then a further drop down to 22 cents, 0.2239, another level right down to 21 cents or 0.2104. There's been a lot of activity that's been going on their GitHub. So it looks like there is potential of some new major announcements coming out very soon for Orchid, which is very exciting. And I can't wait to hear that. It looks like we could be having the news coming out with a more integrated release for Windows or for Linux or for the staking mechanics. Really would love to see them announce that they're, that they're now going into other markets besides just VPN space. These are the drop-down zones. If it decides it wants to go up, then realistically, go above 30 cents, go above 32 cents or 0.3229. Those are some very, very key important levels. And then actually next up on the Fibonacci retracement would be at 33 cents or 0.3379. And then we're starting to work our way back up to the previous all-time high of $1. Now let's go take a look at the graph. All right. Well, the graph had an explosive start. I mean, this thing was like 10 cents and it shot up big time. It went all the way up to 81 cents. Next day had a massive dump. If I remember correctly, there was actually some pullback going on with Bitcoin on that date. So it did have a huge sell-off that took place. It started to drop down lower. As you guys can see, based on these 3 separate days, it was essentially the second daily candle position of where it started, or the end of the first day. Well, technically, I guess the second day candle, but the 3 progressive greens. So essentially on the end of December 18th, 2020, that was the baseline level of support that we saw in the formation right over here. So I'm going to go ahead and create a little bit of a line going across like this. And let's change that over to red and use that as a reference point. And from that position, this is where we could potentially see it having a major drop down zone. Let's go ahead and swap this over now into a Fibonacci retracement. Fibonacci retracement right down to here. I'm going to go ahead and exclude the January 11th candle position wick because it is an irregular variable. And based on this pattern, as you guys can see very clearly, we bounced right off of the 0.382 on the Fibonacci retracement. That massive green candle from yesterday did tap that, and then it came back down. So based on this position, if it decides it wants to go back down to the lower level for the 0.236, that's about a 50% pullback. And I've been seeing that with these pump and dump situations taking place with cryptos. As of recently, when we get these big gains, it's about the 50% range that it pulls back before it decides it wants to have a further continuation on or a progressive movement slowly trickling down, right? As you guys can actually see here, this is a little bit further back than what I'm referencing, but just kind of a visual example. Back on December 26th, you guys can see that there was a big candle that was green and then a retracement back down, which actually had tapped right onto that 0.236 of what I'm referring to now that I actually look at it right there. And then it had to just a progressive trickle down effect right there. So massive gains right here. The volume in itself, nothing super comparable to what we had in the previous markets. In fact, as you guys can actually see on the level that it's at right now, we had the majority of the candles from December 27th to prior, all the way back to December 18th. There were higher volume candles than what it was with yesterday. And yesterday was quite a substantial incline on what happened with the price gains. So I would be concerned that there's going to be some selling pressure. Again, I think that there's a good chance that it can end up coming back down to the 0.236 on the Fibonacci retracement. There is some fighting action that's taking place. If it decides it wants to go even further, 37 cents is a major level of support. Down below that then would be at the 26-cent range, 0.2656. If it decides it wants to climb up, then I would be looking at us trying to break through right here, 47 cents, 0.476. That's on the 0.382, the Fibonacci retracement. And the next major zone is going to be at the 0.5 level on the Fibonacci retracement, which is 54 cents approximately, right? So we still got plenty of room to grow. This is a big project a lot of people have been boasting about. I own a little bit of the graph as well. I think that its design is very interesting, and it is going to have a lot of use cases for the future as long as there's no other competitor that comes out that's essentially doing the same thing but just a little bit better, because the graph is still pretty new to the actual market itself as far as for people discussing it and the adoption rate and its popularity goes, right? So it's holding its ground right now as the leader in this market space. But how long that can hold, we'll have to see. If it can maintain itself, if it can gain some ground, ideally if it can break above $1, then that's going to be something very key for its future. And if it can hold on to and hang on to that $1 position. Anyways, that's going to go and do it for this video. Once again, guys, if you're new to the channel, don't forget to hit subscribe, hit the thumbs up like button, click the bell icon. Let's try to get to 100 likes on this video. Every single video that I do, we're trying to get to 100 likes, guys. And it means so much to me that you do that. Leave a comment down below. Let me know what you thought about everything we talked about today. Is there anything that I missed in the news that you think is really important that should be included in this as well? Be sure to tell us down below. Thank you guys so much, and we will see you in the next episode.